For years now, there have been rumours floating around that some of the richest men in the world have not been paying their share of taxes to the government. The moneybags involved have always denied these allegations, but in early 2021, the secret finally came to light when a report was published showing that people like Jeff Bezos, Elon Musk, and George Soros avoided paying their own fair share of taxes. In this video, we will show you how tech billionaires who happen to be some of the richest people in the world avoid paying taxes by manipulating the system through legal means. Not too long ago, a report broke the news that Jeff Bezos had not paid income taxes for 2 years. The ProPublica report showed that the Amazon billionaire did not pay any income tax for 2006 and 2018. He was not the only culprit, though. In the same report, there were records to show that Elon Musk also avoided federal income tax altogether in 2018. The records were sourced from the confidential tax documents filed by these men with the Internal Revenue Service. You might be asking what ProPublica is. Well, ProPublica is an investigative newsroom that investigates the sharp practices of men and women in power. The investigators at ProPublica obtained a vast treasure trove of IRS data showing the tax filings of some of the richest people in America over the last 15 years. The data further showed the financial dealings of these billionaires, some of which are Rupert Murdoch, Mark Zuckerberg, Warren Buffett, and Bill Gates. The report shows their audit reports, gambling wins, stock trades, and income earned from their investment portfolios. All revenue sources were covered in this report. The allegation is an indictment on the tax system because it demystifies the long-held myth of the American tax system. Before now, the myth held that every single American paid his or her own fair share of taxes. However, this report pours cold water on the sentiment and proves that even the richest Americans can game the system without consequences. Paying millions after earning billions as income does not represent a fair share of tax payment, does it? Bezos is one of the main figures exposed in the report, and currently the Amazon founder is listed by Forbes as the richest man in the world. Bezos has a net worth of $188.8 billion. Second on the list is Musk at number 2 with a net worth of $153.3 billion. Musk is also one of the billionaires to have evaded tax using the weaknesses in the tax code. So how did they game the system? If the IRS is believed to have a watertight system, how is it possible that the system was cracked by these men for all of these years? Musk and Bezos have much of their net worth from stock holdings and not from annual income, and this is how they managed to evade tax without facing sanctions. For instance, Bezos owns about 10.3% Amazon stake, which is valued at $170 billion. This is where the majority of his network lies. Due to the fluctuating nature of the stock market, calculating the amount that he is liable to pay as tax is not so easy. The same is the case with Elon Musk and many other billionaires who have their net worth majorly tied to stock portfolios. But in the case of Bezos, more than $19 billion of his wealth is not tied to his Amazon stock, so why has he paid so little tax? Bezos can afford skipping taxes because stocks are not taxed except when they're sold off. His network increased between 2006 to 2018 by $127 billion, but he only reported an income of $6.5 billion in 12 years. Out of this figure, he only paid $1.4 billion as tax. Furthermore, Bezos and other stock-holding billionaires also have the extra benefits of turning stocks into cash whenever they want, and that's without having to sell any. They do this by borrowing money against their stocks at ridiculously low interest rates. This is one way that America's richest were able to game the system. But on a general note, let us show you how the richest people, many of whom are tech billionaires, are able to really avoid paying these sums of taxes that are nothing to be compared with their income. About 1% of the population controls roughly 40% of America's wealth, but they are able to pay less tax relative to their income. One way they do this is by placing the money in trusts for their children. Trusts do not attract federal estate tax. Asset freezing involves keeping an asset in another person's name for a time. At maturation, the value of the trust is transferred to the beneficiary, but the interest derived from the trust is held by the person or entity who established the trust in the first place. Another way is by sending the money overseas. There are 2 ways they do this. One way is to send it to tax havens with lower tax regimes. Another way is to report the funds as investment funds. With many of these tech firms expanding to other countries, they have been able to funnel undeclared profits to other countries under the guise of funding their businesses abroad. The Cayman Islands, for example, is home to more than 85,000 companies. This is a tiny country with more registered businesses than inhabitants. Another method they use is to buy options with their income. Just like stocks, options are only taxed after they are sold and not before. And of course, many of them open shell companies. These are companies that only exist on paper with no verified address. They exist legally but have no product or service to show for their existence. These companies are used to buy and sell products and services that do not exist. They also use equity swaps to avoid tax payments to the government. When you swap equity with another party, you avoid local taxes and transaction costs. Some of our fellow billionaires open corporate organizations. This method is not widely used, but some billionaires still use it after exercising other options but still have more to hide. There are so many ways they do this. For instance, they set up a new company and channel cash through it, then pay themselves an interest-free salary. They also claim expenses while paying little or no tax, since they can claim that they earn no income from the endeavor. The IRS charges taxes on your income whether you choose to spend it or not. For people with so much money, they can afford to push the income forward. The money is theirs, but they do not cash it because they leave it in a deferred compensation plan. This method is so rampant that a study was released to show that more than 79% of Fortune 500 CEOs deferred their payment for years. But the most popular method they use is donating money to charity organizations, many of which are their patrons or founders. Government does not tax charity, so they do this repeatedly and get away with it. Another method is to give it as a gift. Cash gifts of $13,000 and under do not attract any form of tax. And there is more. They can rent a property for up to 2 weeks in a year while having a backdoor agreement with the landlord not to claim the rent as income. With all these underhand tactics by the rich, one can understand why socialist sentiments seem to be gaining traction in the US. Having so much money and still evading tax is not a practice many will appreciate. And as you know, most people are poor and can barely earn a standard wage. With massive homelessness and flaking educational standards, many argue that society will be better off if these billionaires paid their own fair share of tax. With people like Bernie Sanders and Alexandria Ocasio-Cortez in the US Congress spearheading President Biden's call for a rise in taxes, we might see many of the rich elite paying more than they used to. But this may not happen because these Silicon Valley billionaires funded the elections of many in Congress and the Biden presidency. Whatever happens, rest assured that we will keep you posted as events unfold. But before today's video finds an end, make sure you hit the like and subscribe button for more of these videos. Thank you for watching. Take care.